Hello and welcome to the look ahead for Thursday, the 28th of March with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow we've got from Germany, German retail sales and unemployment data. From the UK, we'll be looking at Q4 GDP, the final reading. Also got Q4 GDP from the US, again, the final reading, as well as US jobless claims and University of Michigan sentiment to be focusing on. So just starting off there with German retail sales. Retail sales are expected to rise 0.3% month on month, up from 0.4% fall in the previous month. Now, this is more or less sort of in line with data that we've been getting from Germany across this week. For example, we've seen consumer sentiment has just been ticking a little bit higher. We've also seen business sentiment has been improving slightly, albeit very slowly. Things are looking as if they could be turning around, and at least the downturn in the German economy could be bottoming out. Now, as far as what this means for the DAX, well, we can see on the chart here, the DAX is trading at all-time highs. So what actually has been driving the DAX higher is these expectations that the ECB and the Federal Reserve are going to start cutting interest rates soon. I think, if we do see weaker data, for example, from Germany, that might, in fact, even drive expectations of an earlier rate cut from the ECB and help the DAX potentially higher rather than having the effect of pulling it lower. Also, we've got that AI optimism that's been driving stocks higher on both in Europe and in the US. Now, just as far as the DAX is concerned, so we've seen another record high today. That's its sixth record high in as many sessions. The price is just testing that high of 18,500. It's been guided higher there by a rising trend line. Buyers are going to want to break above that 18,500 to take the price onwards and upwards towards fresh all-time highs and 19,000. As far as supports are concerned, just beware because we do have the RSI quite in overbought territory there. But as far as supports concerned, there is a sort of an immediate support on that rising trend line. We can see there that comes in at around 18,250. If we get a break below that, then I think 17,900. I'm looking at a support level there. Below that, that's the weekly, last week's low, and then below that 17,600, which is the March low. So just to move back to what else we've got, UK GDP. As I mentioned, GDP in the UK for Q4, it's a final reading. So unless there's a big revision, either upwards or lower, it's not really likely to have a big impact on the pound. I mean, just think about it. Q4 is now quite stale, given that we're about to enter the second quarter of 2024. And the other thing to point in mind, the data is expected to show that the UK economy contracted by 0.3%, tipping it into recession. We do know since then that GDP data for January has shown that the UK economy grew very slightly, suggesting that the recession will be shallow and short-lived. PMI data has also supported that the UK could be moving away from the recession in the first quarter of this year. So, I mean, as far as pound US dollar is concerned, as I said, we're not really expecting that data to have a massive impact on the value of the pound. I've seen some pretty big moves last week in the pound. Things have sort of stabilized this week, albeit at a lower level. So we've got the pound really struggling to make much headway around that. It's just above the 126 level. Now, that's the support level that sellers are going to want to take out to drive the price lower. We did see a move lower. We've obviously got the 200 SMA in there as well. We did see a little bit of a move lower to 125.75. That's the weekly low. Did spike back up. So, I mean, sellers are going to be looking to take out 126 and 125.75 to bring 125 back into focus. On the upside, what we're going to be looking for is a move. There's that falling trend line resistance that you can see there. That dates back to July last year. Now, if we can get the price above there, that would be an encouraging start. But if you look more broadly at this price range, the price has actually been pretty range bound, I would say, since around November last year, between that 128 on the upside and 126 on the downsides. We haven't really seen too much of a breakout from those levels, but that's what we're going to be looking for, either a breakout above 128 or the breakout below 126, which is looking more likely at the moment. So just talking about US data, as I mentioned, we've got US GDP, again, rather stale, given that it's the end of it was the end of last year's. Figures expected to confirm the 3.2% annualized growth. Also, we've got jobless claims. Again, nothing major expected there. 215,000 up from 210,000, sort of been hovering around these 210,000, 215,000 level now for quite some time. So I just, we're still seeing that resilience in the US labor market. There are no big surprises that are really coming in from that data. Also, we've got the University of Michigan sentiment just expected to weaken very, very slightly to 76.5, down from 76.9. Again, it was only if we see a big revision or a big move in those numbers that we could expect to see some reflection in the price. Today, gold, we've got the gold chart up here. I mean, prices have been relatively muted today in the sense that there hasn't been any major data. We've got Christopher Waller, who's due to speak a little bit later. So gold prices, they've been trading in this range after peaking at that sort of all-time high of 2222. They've been trading in that range of 21.95 and 21.49. That was the previous high. And what we're seeing is within that range, there does seem to be sort of a bias towards the upside. The price does keep trying to just breach that 21.95 level. Now, if we can get a close above that 21.95, that's really going to put the bulls on their way back up to that fresh all-time high. Failure to close the week out or to close the session out, over that 21.95 level could see a retest of the 21.46. Below there, 20.86 would be the level to watch. Also, just as we've got so much US data going on tomorrow, we might as well just take a quick look at the Dow whilst we're here. So basically, the Dow Jones has been, charging higher, and then it had this period of consolidation, and then it's peaked to a fresh all-time high just this week. That was of 39,894. Now, we've since seen the price just ease lower. Sorry, that wasn't this week. That was last week. Getting all confused. The price has just eased lower. It's been testing support this week at the 39,285 level. That was the previous all-time high, which was seen just in February, late February. Now that's offering support. So far, the sellers haven't been able to break down that support. We have just seen a rebound back off that support today. So, if we get, perhaps weaker than expected data, which would fuel expectations of of that Fed rate cut in June, then that could help the Dow Jones push back up towards the 39,894 and 39,000. Bit of a key level before 40,000. That's the one we're watching for. On the downside, they need to break below that 39,285 in order to bring 39,000, the March low, into focus. So I hope you've liked what you've been watching. And if you have, please do give this video a like. And if you would like to receive more videos like this, then please do subscribe.